Like it or not, Warren Buffett is a filthy rich man, and he's always chilling in the Forbes top 10 richest people list. But what's more impressive than that is the fact that he's built 99.9% of his wealth all from the ground up by just simply investing in the stock market. Not sure if you remember when Drake said 0 to 100 real quick.
We go 0 to 100 nigga, real quick.
Well, Warren Buffett said 0 to 100 billion real quick. But how has he consistently handpicked stocks that would outperform the top 500 companies year after year? Well, that's what today's video is all about. And if you like content like this, make sure to give this video a like, and also don't forget to subscribe so you can see more in future episodes. But today we're gonna be uncovering how Warren Buffett picks these stocks and how you can do it as well. This little metric that most people overlook because they're too busy looking at PE ratios or balance sheets is just a simple indicator that helps Warren Buffett figure out when to buy and when to sell stocks. And that indicator is actually called the Warren Buffett Indicator. Yeah, kind of ironic, right? But all joking aside, even though the name isn't very original, the Buffett Indicator has actually helped Warren Buffett make every single move, which he calls the single best measurement of where the stock market stands at any given moment. And at the same time, a sort of crystal ball of where the stock market is about to go. Pretty neat, right? But you still might be asking the questions, how does it all work and how can we get rich by using it? Don't worry, I got you. Let's start with how it works. The Buffett Indicator takes the total value of the stock market and compares it to the gross domestic product or GDP of that particular country. And that just means how much stuff we produce as a country. And using that equation, you can paint a pretty good picture of whether the stock market is overvalued or undervalued. But that's the easy stuff. Let's go a little bit further. Warren Buffett explained that a ratio above 100% on the Buffett Indicator may suggest that the stock market might be overvalued, and a ratio below 70% indicates that it might be undervalued. So when the ratio is above 100%, he's more cautious when it comes to investing and maybe even shake up his portfolio a little bit. On the other hand, when it's in the undervalued range, he is more likely to throw cash into the stock market. Here's where we are right now, and to put it more simply, if the Buffett Indicator is high, then you sell stocks. And if the Buffett Indicator is low, then that's when you want to buy. Now, that might sound simple because it is, and to be honest, I might be oversimplifying it a little bit. What Warren means when he means sell is not to completely sell out of all of your positions, but instead, when the indicator is above the 100% mark, he says to go on the defense, meaning exiting some of your winning positions, anything that might be speculative or maybe growth stocks, and start buying more safe bets with those profits. Things that would perform well in any type of economy. I personally like to call these stocks the need stocks. More popular need stocks are things like home improvement stocks, since houses are always in need of some sort of repair, grocery stocks, and popular fast food stocks, since we humans kind of have to eat something, unfortunately. Luxury goods stocks typically do well as well, not because they're needs, but just because rich people always have money. Big pharma stocks typically do well as well because people still buy medications and still need to go see doctors. And of course, electricity or energy giants do well as well, since we rely on energy to either get around or even just to turn the lights on or off. There are of course other great examples out there, but I just wanted to get you started with some of these. But when the indicator gets low, he says to buy everything that's a good company that's also on sale. But again, that's at least what he does. There are other principles that you and I should follow as well, because if you want to make real wealth in the market, you shouldn't just buy the cheap stock because it's on sale and the indicator is low. Even if that indicator is so low that all the signals are saying buy, buy, buy. What Warren does in addition to the Buffett Indicator is look for companies that are on sale. Companies and industries that he understands and have a strong track record. And on top of all that, preferably ones with a nice dividend as well, which at his ridiculous levels of wealth pay a pretty penny every single quarter. I mean, I'm talking tens, if not hundreds of millions of dollars a month that he's collecting from dividends. Now, of course, since you're probably in a different position than Warren Buffett, you should have your own strategies based off of your own circumstances. But don't be afraid to use the Warren Buffett Indicator because it's free and has literally made this man billions of dollars. Remember to use its ups and downs to your advantage, but more importantly, subscribe to the channel to see more videos like this so that way we can get wealthier together. Oh yeah, and if you want to know what stocks the rich are buying, go check out this playlist here. I think you'll enjoy it.